Should we get this going? All right, let's get this party started. It's 7 p.m., June 7th. We'll call the meeting to order. And the first item of business is the roll call.
Yes. Committee Member Bowman.
Present.
Vice Chair Priven.
Here.
And Chair Trainer.
Here.
And Committee Members Kerr and Papalia are absent.
Okay. I will read the land acknowledgement. The City of Albany recognizes that we occupy the land originally protected by the Confederated Villages of Lisjon. We acknowledge the genocide that took place on these lands and must make strides to repay the moral debt that is owed to this indigenous people, specifically the Ohlone tribe. We thank them for their contributions, which have transformed our community and will continue to bring forth growth and unity. The City of Albany commits to sustaining ongoing relationships with the tribe and together build a better future for all that now make this their home. Okay, so the next order of business is the approval of the minutes from April 5th and May 3rd. Do we have a, I don't even know that I've actually seen those. Are those posted or?
They should be attached to the item on the thing.
Okay.
Let me double check.
They are. All right, I'm sorry.
No, I can share my screen. I know I can. Okay. So when you go to the agenda, if you start here and you see the financial, and you click on the HTML agenda packet, it'll open this. And whenever anything has a paperclip next to it, which I remember Clippy from original, like full on, this has a smiley face. Okay. The approval of minutes, if you click on it, the two draft minutes are here.
I was thinking it was going to be the icon with that little download thing, like the other attachments.
If you have not had a chance to review these and you guys would like to push off approval, you can motion to push the approval to the next meeting. That is an option.
You want to just do that?
And we could just open it now, too.
Do you want to just
comfortable?
We could just do that because it's largely a procedural thing. There's not, the minutes just show the voting records on things, on the previous approval of the minutes. And then it's really just, the agenda. There aren't special notes or anything attached, isn't that right?
No, and I did go back and listened to the meeting and paused every 3 seconds to make sure I fully got the motion for the sugar sweetened beverage tax. Okay. Yes, this is April's minutes.
Right, and that motion was then included in the report to the council, right?
The majority of it was. The part that was missing was that the council not consider previous year's surplus as additional expenditures to use in future years. I got the first part, but not the second, the amendment.
Okay.
Was there an opportunity to include that in a subsequent report?
I think I will double check, but it is here.
Okay, I guess it would just, if there's a possibility of sending them the completed motion with that second part, then that would be a good thing to do.
Agree.
then I think the rest of that had to do with talking about the work plan. So, yeah, and then that meeting adjourned at 6:43. That was the early meeting. Okay, so this would have been the May 3rd meeting, call to order, approval, that we didn't have minutes to approve. I don't think we had, well, it looks like we didn't vote on anything. Oh, there we go. Oh, Judy motioned to continue the meeting until 10:30. That meeting went really long. And then we also agreed to move items 4 and 5 from that agenda to the next meeting, which those are also not going to make it onto today's meeting agenda, but I've written them down for a future meeting. So that motion was approved. And that was it, so.
It looks like there, if you go to 6.2, says Chair Trainer and Committee Member Bowman and Kerr will be attending the
budget study
The
session.
study session, yes.
The council budget study session.
You can motion to add that to the minutes, and I will do that
motion
before.
to add that to the minutes.
Second that.
And then at the top of the next page, would you like me to include how the deficit will affect the general fund balance?
In the
Not
budget
sure.
package. It was a reference to the biennial budget.
Oh, would like me, okay.
Yeah.
It's a statement.
Yes, and I apparently did not change my notes into, I will update that as well.
Okay.
Doing good here.
Okay, so do we have a motion to approve these minutes, these 2 sets of minutes?
Yeah, I motion to approve as amended.
Second.
Okay, and Committee Member Bowman,
Yes.
Vice Chair Priven,
Yep.
and Chair Trainer.
Yes.
Motion passes.
Great. Do we have any public comment? One public comment. Gregory Bone.
Thank you. I'm Greg Bone, retired employee from the police department. I had occasion to look at the FAC presentation to council in the budget study session on May 15th, and as an observer from a distance, I mean, it was superb. Really well done. Hit all the points, everything you've said in your meetings, everything you've said in your 2 reports was touched on very well, concisely. My view was the council was listening intently, which I found very heartening. I think clearly you have their ear, so this is a good thing going forward. I was personally a little disappointed that the proposed budget passed shortly thereafter, but to remain optimistic, I think we just see how things go, keep checking numbers, keep reporting honestly to them, and they can perhaps, make some hard choices if they have to. I think they will have to. Hard to see the 2 minutes. So that is point 1. Point 2, I've looked at some past biennial budgets, and I think it was the 21-22, I'm not sure. But from what I've been able to ascertain, I think there are in the neighborhood of 390 to 400 past employees that have retired from Albany. I think there's 16 or so employees or beneficiaries from the closed police and fire pension fund, and of course our city employees, current ones. And I'm here. A lot of these other folks are spread out all over. The retirees especially, very high cost of living in this area. And I don't think a lot of people really know what the potentials are here. And that's why I appreciate your work. It also puts me in a position, since I am here to advocate for these different cohorts here. I want to do that. I want the city to be in a position where they are financially sufficient to honor the pension obligations, and I really appreciate that point being spoken to specifically by Chair Trainer in the May 15th meeting. Having said that, I think I'm smart enough to also know that there's a lot more than just us that I'm representing involved here. There's we, it's the whole community. And if we can solve what I think will be some potential issues downstream, if we can start to solve them now and start taking some steps, I think we can mitigate what will be coming at us if we don't start doing something about it now. I think it's very clear something's coming, and this is why your work is so very important. Thank you.
Thank you. Is there any more public comment from anyone online? No virtual attendees. Okay, great. Okay. Oh, you know what? I passed over the announcements section. That was section 3. That was part 3, announcements for staff or committee member announcements. Are there any? I guess I'll just make a quick follow-up comment that Kyle and Judy and I did attend the council budget study session on May 15th, and we really appreciated the opportunity to get to speak to the council and give our report and open up those lines of communication. So I'm hopeful that that'll lead to good things. Okay, so then let's move along to section 5, the presentation section. So the first item up is the dashboard metrics.
Is it possible for me to easily share something on the screen, or Heather, will you be able to do it? I don't think I have an invite to the Zoom. And this is also in the agenda, so you can open it up there as well. Awesome. Okay, so Mark and I met last month, and we had talked about this idea of having a dashboard of key performance indicators for the city, at least on an annual basis, if not potentially on a quarterly basis. It's a snapshot for how the city's performing throughout the year, and Heather, our intention is to meet with you at some point to go through this to identify feasibility of each of these things, get input from you as well in terms of what you think could be valuable, and also get input from the rest of the committee. I know we only have one additional person here today on what actually should belong in such a report. Mark, anything that you'd add?
Feedback from the public as well.
And feedback from the public. Okay, so I think you can skip to the third page. Is just meant to be an executive summary, a placeholder text.
It's riveting if you know Latin,
I
apparently.
know, I was like,
I don't know Latin.
I'm kidding.
But here's what we were thinking. Essentially, a revenue and expense snapshot. And Heather, I've seen you put similar things in some of the reports to the city, but this was formalizing like the previous fiscal year 2022, in this case, the sources of revenue and the sources of our expenses. But then if you scroll down a little bit further, basically how those are tracking within the year to date. So we just finished the third quarter of 2023 fiscal year. We thought it could be useful to show 2022 fiscal year actuals, how that stacked up against what we budgeted in 2023, and then the actuals throughout 2023. These are all dummy numbers, by the way, that I have on this slide, so don't read too much into them.
Oh, okay, because I was like, it looks
Yeah.
like we're under budget on everything, and I didn't think that was true.
Purely a mock-up. These things take a lot of time to produce. So again, I want to be conscientious of Heather's time, and her team, who would ultimately be producing something like this. But the idea here is you could get a very easy visual, as you just intuited, that we were under budget on everything in the fiscal year 2023, for example. So there was a revenue one, an expense one versus budget, and then key drivers of, if you actually look at the key buckets on the pie charts that we just showed that were driving those variances, or the next two graphs on there. So I'll pause there, see if there's any comment from other members of the committee or staff.
I think it makes sense to look at the largest component of revenue and the largest component of expense, because those are the things that will be responsible for most of the budget. So property taxes being the largest revenue item and salaries being the largest budget item. So I think you're on the right track with that. I wonder if, I don't know, if this muddies the water or makes it less useful, but salaries, pension, and benefits go so closely together with each other. And when you add them all up, they're about 70% of the budget. And so I wonder if it makes sense to include those other two captions there because they're really closely interrelated to the salary, or maybe that's not good. I don't know. What do you guys think?
Did you mean add them into the same chart, or?
So when you have that salaries versus budget that's showing on the lower right of the screen, and what if you made that caption be something like, total personnel costs? So it would be sort of a fully burdened number of salaries, benefits, and maybe yes or no to pension, because we know pension is a big variable. But I tend to think of this budget as 70% is just taken up by the personnel costs. And the salaries, I think, is 51% or something based on the pie chart. So I don't know, I just throw that out there as a possibility for inclusion as, kind of taking personnel as a caption as the largest budget item.
And so I can tell you what I put on there were just placeholders of examples. And what I was thinking is it could be up to staff discretion, like essentially what to show. If you are seeing a variance compared to budget or compared to last year, what is most interesting to pull forward that's driving that variance? Or if there's not really a variance, what is the biggest item? And maybe you group some things together. And it doesn't have to be two. This could be a number of additional snapshots depending on how many things are that much different than what we budgeted.
So I do have a question. When you say variance to budget, do you mean like where you are in the year, or do you mean where we anticipated being? So for example, the UAL is paid 100% in July. So it always looks like it's over budget until we hit like the last quarter, right? So I always call that out in my narrative and say, don't panic. Like, this is our biggest cost, and I know it looks like it just skews everything. Or are you talking about calling out items that are not where we anticipated? So for example, election costs this year, because of ranked choice voting, they're significantly higher than we budgeted for because we were not anticipating that, or both.
Yeah, so I don't know how you have this set up in your systems, but like the UAL, for instance, if it all hits in July, what I'd anticipate is this is a quarterly view that you literally only have one budgeted bar, and it all hits in July, and then you can show what the actuals did for UAL, and it all show in July. and then you would illustrate that there's essentially nothing else expected for the rest of the year. So I would only show that one if it was way off the mark, for example. And that would also be reflected in the overall expenses versus budget. Like July, August, September, that first quarter might be way higher than the others. But do you have it broken out like that?
We budget annually. We don't budget like
Okay.
either monthly or quarterly. So it always looks skewed when I prepare it in the graphs, because it looks like, oh, you budgeted this and 25% of the way through the year, you're up here. But I can see what I can do.
Yeah, I thought I saw something in one of the reports that was broken out quarterly. I can't remember where. And that's
Yeah.
where I drew some of the inspiration from.
I often would put in charts on property tax to explain why it looks like we got no property tax in the first quarter, because it all mostly comes in the second quarter. And so I would I'd put, the 3 years of here's historically what we've gotten in the first quarter, second quarter, third quarter, fourth quarter, so people could see that it's okay.
Yeah. Hey, and that's one of the examples that I tried to at least be somewhat accurate in terms of what I know around property taxes and when they might be paid.
Yeah, I think it's a really good question that you ask, because it's hard from my perspective. When we get the quarterly reports, it's hard to interpret how we're doing compared to budget, because there are all these nuances like, oh, property tax hits at this time and the pension, and so you're doing all these adjustments in your head and trying to figure out, well, okay, are we doing better than budget or not? And sort of bottom line, it's hard to do. So part of what we wanted to do is try to make it kind of visual and easier. And one of the things, this isn't necessarily in comparison to budget, but once we have kind of a history of years of, this shows just like 1 year, the 22 actual, but we could, over time, you could show the past 2 years, the past 3 years, and that would all adjust for that. So you'd say, okay, compared to those years as of the third quarter, it's much higher or it's much lower. And you wouldn't have to be making all these adjustments for timing, because that would be baked into those older years automatically.
So it's much easier to do this type of analysis for actuals year over year than it is compared to budget.
Right.
But yeah, it is much easier to do it for actuals year over year.
Yeah, or even a similar exercise, if it is too hard to break up our budget into these quarters, could you just use the previous year's actuals to spread it or do something like that?
I'll see what I can do.
Yeah. Well, again, we don't, I think part of, as Kyle said, our next step is to meet with you, because we're trying to create information that we think would be useful for us and the city and the public, but we also don't want to, we want to do it in a way that is sensitive to what you think would be useful, and also what is, not overly burdensome. So,
And hopefully it could be helpful.
I think
Go
that
ahead.
touches on a good point, which is the budget is really only on an annual basis, but the revenue and the expenses are sort of splotchy when they occur. And so, as Mark said, that leaves us kind of doing the math in our head, and we're like, okay, we're supposed to be 50% of the way there on the property taxes on this date, but we're 100% of our expense target for UAL payment, like on the first day of the year, and things like that. And so I don't know if there's some way to, and again, this is just thinking out loud because I don't want to make extra work for you, but if there were a way to take the budget and say there are certain factors that don't divide evenly by 12, property tax receipts, UAL payment, and just sort of, back that UAL payment out of your, pension calculation, put it all on day one, nothing the rest of the year, so that when we're looking at the budget versus actual, we could see like, oh, okay, we're at 100% of the budget there, and the budget is all there on day one, and we're fine on UAL. And so we don't have to keep doing the mental math, because I do find myself doing that every time too. Like, I have to remember this, this, and this about how the budget breaks down. So maybe there's just some sort of a formula that takes half of property tax revenue and puts it in the quarter that December falls in, and then you take the other half of property tax revenue and you put it in the quarter that April falls in. And just a couple things like that where those things don't happen evenly over the course of the year. I don't know if that would be easier to, at least to help us,
So some of them would be easier than others. Property tax, UAL, I got those. Salaries divide fairly evenly until you get to overtime. Fires overtime skyrockets when it's fire season and they're doing mutual aid. So that I would have to go back through and, kind of figure out when has that been historically, do we see it shifting at all? Other things like business license revenue, I can tell you all comes in January. Well, most of it comes in January. And so, but recreation revenue is a little, depending on, what classes are popular and when they're popular and all of that. So some things would be easier than others. I can look at what I can do easily and then potentially see how much effort it would take to pull out some of those other things.
Yeah, and I would add there's a materiality aspect. So if we're talking about recreation revenue and it's not, I don't know, but if it's not a super material thing to the total revenue, it's okay. So don't, it doesn't have to be perfect. It just, there's some big items like property tax, whatever, that are significant.
Is there anything else from this first section that, Mark, we discussed that you'd like to highlight that maybe isn't on here?
I think the other thing maybe that we don't, didn't really come to a conclusion on, but is, there's the KPI and then there's what's the goal within that KPI, right? So the budget in some sense is the goal, but on the other hand, we don't really want to make budget because the budget is a deficit. So the goal is actually a little more revenue than budget and a little less expense than budget. So maybe for all these, adding some, we'll talk about maybe adding some parameters, where are we? And also, how does that compare to where we would want to be?
Yeah, maybe there's how you can do, and I'm really not a great chart visualization kind of person, but you can do a sort of an overlay, like a line chart on top of these bar charts, and one of those could be break-even budget, right? Like income and expenses break even, and then where we are right now kind of thing. So I'm not sure exactly where you draw like the zero, right? But a break-even budget would be the goal ideally. Mm-hmm. And then if we're running at a deficit, then the line would kind of run underneath the zero. And if you're running at a surplus, the line would run above the zero. And then that line would just kind of cut through this thing horizontally, those two lines.
I was going to figure that out. I'm not. It's a great idea, but
the idea
it's
person.
not.
I know you can overlay those different, like
I know
line chart
what
on
you're
top of a bar
talking
chart.
about.
So maybe something like that.
Yeah, I can see how that could be useful. Okay, if there's no more comments on the first page, why don't we go to the second? Excuse me. So the rest of this we were thinking would be produced on an annual basis, whereas the first page was more of a quarterly view. Basically, a lot of this came or was inspired by the state auditor's website, I believe it is, that has many of these metrics for various cities populated and available for comparison. But we had one page here that was focused more on the assets side of the ledger, if you will, encompassing also revenue and the general fund balance. So starting with things that might be useful to track over time, we had revenue per capita as it compared to I have up there just a set of peer cities. And then the general fund balance over time, again, these were, I think, placeholder numbers. So don't read too much into them. And then the percent of budgeted expenditures, because we have the policy that it should stay above 25%. And then a forecast of those, of the general fund reserve balance if we met budget, which I think is a meaty part of our discussion last time as to how that would fall below the policy if we actually hit the budget. But all of us in the room know that we don't actually expect to hit the budget, but it's still relevant to provide that transparency. And then the month reserves on hand, I think, really helped bring the concept of the general fund reserve balance to life for folks in the room, and I think for the public to understand. So that's why that would be shown. And then that last piece, sorry, if you scroll up. That last piece is just a chart comparison of how Albany compares in terms of general fund reserve percentage of overall expenditures and transfers out compared to the other cities, where higher is better. We're actually below the state median. For some reason, in the auditor's data, we only have data through fiscal year 2021. So we'd have to discuss if there's a way around that to get more up-to-date data, but still felt this could be helpful. Any thoughts or comments?
I'm kind of surprised by that last chart, where the general fund percentage of general fund expenditures and transfers out. The state median, so they're saying for fiscal year 21, the state median city has a general fund that is 64% of its general fund expenditures and transfers out. Does that seem right to you?
That one's actual data.
So I'm really surprised by that, because one of the, that state of the state auditors report where they give a scorecard to cities in California, and we have scored in, I think, the lower quartile. We've scored kind of low on that, but a high spot for us every year has been that our general fund balance is good. And so this is making it seem like, well, really, it's not that good.
So I think, and I haven't brought my review of the fiscal year 21 state auditors report to you guys yet. I have not gotten to that, but I think it's similar to when we were talking about the pensions with GovInvest, and it's really specific. I looked at the top two ranked. There were two cities that tied for number one in their in the state auditors report thing. One of them doesn't have pensions, and the other one was like so small, and it just, there's so many factors that you have to take into it that it's very hard to just look at things like this and be like, we're behind. And I think when we review the fund balance policy, that's one of the things, like I said in my report, the Government Finance Officers Association recommends a minimum of a 17% fund balance. And then you have an analysis that you can do about where your city should be. And we're at like the 25% mark. We might want to go a little bit higher, but 25% should in theory be okay. And then you have the state auditor's report that says that you should always have a 70% fund balance or something like that. And I don't know why they decide on that number, but you have places like Emeryville. Emeryville wants a 50% fund balance because all of their revenue is sales tax. So something like the pandemic happens when people aren't going to stores, they don't have a lot of residential. So we were okay with sales tax because we had a lot of residential. And so there was that, point of sale, online sale revenue that we got. Emeryville didn't maintain their sales tax collections. So they have a 50% fund balance specifically because they know if something happens, their sales tax goes away. And that is a huge problem. So I think that it is, one, we have a lot of smaller municipalities in California. So it surprises me because I know that everyone's been having issues with pensions, but it doesn't surprise me because for smaller cities, it's easier to get a 50% fund balance and maintain that, especially if you don't have a lot of social services, or you don't have a pension, or things like that. So, but you really have to take into account where we are and what we should be doing. It's a good thing to look at and say, hey, it's something we should review, but we do review it when we review our general fund balance policy. So I wouldn't necessarily look at this and be worried.
Yeah, so those are great points. And I guess what I would want out of this snapshot is, like I said before, what are the parameters of the goals? So, okay, we're at 40%. Our minimum goal is 25%. State auditor says something else. And then also some benchmarks. And be careful about who we benchmark against. Maybe Emeryville is not an appropriate benchmark, so let's be thoughtful about which cities we want to benchmark against. Maybe the whole state is not the right benchmark, but let's really think about whether they're local cities or they're cities that look a lot like us. Let's include them as benchmarks and then just show those as a comparison so that we can really get a fair idea of where we look in comparison to our goals and comparison to other cities. And yeah, so that's why we would want to. We totally realize this isn't ready for not even prime time. This is
Right.
This is like
For conversation.
pre-broadcast, right?
Right.
But anyway, those are great. Those are great comments.
Yeah, I think with any metric, the question I'm asking is is this good or is this bad? So I think having our goal stated somewhere could be helpful, and then you can compare it longitudinally over time to see how it's been trending, which we tried to do, and then against what you would consider peers. I don't know if those are the right peers. I took those out of a bigger list that Mark provided, and I cut out Emeryville for some of the reasons I think you mentioned last time, and kept in some of the similar-sized cities and then our neighbors, essentially. But those might not be the right comparisons, given there's different things going on. And then we have the other issue of, is this data actually accurate, given, Kim, what you pointed out about the state median being higher than I think you expected?
Yeah, I'm just surprised by that. What was the source of that?
So the state audit website, where it has those rankings, there's a little button and you can download all the data. And it actually has for every city, every one of these indicators that's part of their thing, it actually has the data behind it. So if the indicator is, unfunded pension liability as a percent of total pension liability, it'll have the denominator and the numerator. And so it has a lot of data. It has, revenue per capita. It has revenue, it has population. And so in that sense, we can create some performance indicators that are different than what they have if we want to, look at different ratios,
Pull out
so
some
to
of the
speak.
data.
Yeah, but all the data for every city, unfortunately, it's very lagged. I think the latest data is through the end of June 30, 21 right now. So there's a huge lag, but it is pretty comprehensive.
So if you I just Googled state auditor local government high-risk dashboard is really where all of this comes. They have very pretty charts. and interactive information, but that you can download that information. That's where I did all of my analysis on, who's ranked first, how do we compare, and why to certain things. And so it is lagged because, like for our audit, the goal is December 31st. I've reiterated that with the auditors today. But it didn't come out until, April this year. Generally, the local government dashboard is updated in the fall for the previous year. So.
As in, 2022 would show
2022 would show up this fall. It's similar to the actuarials for PERS. Like our UAL for this year is set by the actuarial valuation for 2 years ago.
And if the fiscal 22 actuarial valuations and those pension valuations aren't done yet, then obviously the data can't be here because they're taking the data from that, I imagine, from everybody's individual valuations. I think you make a really good point about what, so the data's great. What is it that we're trying to tease out with these different tables? And maybe that's just a separate thing that we get maybe a presentation from you about, this table shows if we're above or below state median on general fund reserve percentage, et cetera. And this is why this is important in particular, that kind of thing. Because some of these things, I think, talk about your assets. Some of them focus more on revenue. Some focus on percentage funding of pension, or just, there's different things. And we might have different sensitivities or be more vulnerable due to certain things than other things. Maybe our small size of our property tax base makes us maybe more vulnerable than a bigger city. I don't even know. I'm just completely wondering how these things relate. How does a bigger city like Oakland or San Francisco come out versus a small city like Albany?
So it depends, but a lot of it is bigger cities. And, this comes up a lot because, we're often compared to Berkeley. Well, Berkeley has a lot more tax base. So they can have, if, they want to have a lower tax rate, because they spread it over, a lot more property. So that's one reason why, when you're looking at property taxes, they have, what they have, and we have what we have. The other is just economies of scale. So they have, if you're thinking about the fire department, we have one fire station, and so we have, a fire chief, which will cost more because we have one fire chief for one fire station, and they have one fire chief for multiple. So because we are smaller, things cost more because that's just how it works. That's how it works everywhere. So that is, that there are reasonings behind the differences. If you come up with, different things that you want to talk about, that, I can go through how we compare to Berkeley or San Francisco or Oakland or whatever, and how us being smaller or either helps or hinders.
That's
I
helpful.
mean, if we decide to move forward with this and decide on specific metrics to include, I think it'd be helpful to have commentary. I just have higher is better right there, but we could add more color and if you're in the public, what does this actually mean about the city, and how would you think about comparing whether or not Albany is doing good or poorly, and what are some nuances about how Albany is run that make it the way it is?
So I'm not gonna lie, I panicked a little bit when I saw that, because on the one hand, yes, you can prepare better if if something goes wrong, you have the money or whatever. But if you just are, trying to look good and trying to, at some point, you're overtaxing because you're just holding on to money to hold on to money. So I'm not saying we shouldn't have a higher fund balance or higher fund balance policy. It's really an analysis that needs to be done. But I would probably never say we need to have 100% fund balance, because at that point, we're just keeping money that we don't need. So it really when you're thinking about municipal finance, it's really, what can we do with the least amount of resources so that we're, being fiscally responsible.
Yeah, and I'll just add, so can you go to the top of this page where it has the revenue per capita? We kind of skipped over this, but I just want to say, if I was on city council, this would be interesting to me, because if I am thinking about how to balance the budget, I might be thinking about, are we a relatively high tax city or are we a relatively low tax city? So should I be thinking about there's opportunity to increase revenue and still be within our bench, our peers, or is there an expense issue? And so, so I think this is an important one, and it's important to carefully pick, again, the peer group that the council and the public would want to compare themselves to. And I think also, there's so much in your head and your department, right, that that I like Kyle's comment about just kind of having some commentary, so you don't have to keep saying it every year or every quarter when the question keeps coming up. Why are we, a higher expense per capita than Berkeley? Well, there is some, economies of scale compared to Berkeley, but when you compare us to El Cerrito, X, Y, Z. And so it kind of memorializes things that I think are currently, you probably have to repeat all the time and that are in your head. Anyway.
Yeah, and to have maybe a section off to one side where you give a couple pertinent comments like that explain the usefulness of these different tables and charts. I think that could be really helpful.
I will point out, we might even be better than this. I know that at one point someone did an analysis of the tax rates, and they just took property tax bills between us, Berkeley, and someone else. But they included sewer, which isn't a tax, it's a fee. And so I was like, no, that's way too high. We're not really that high in taxes.
Don't other cities have sewer fees?
So they do, but they bill them out separately. They don't put them on the tax bills.
Oh, so,
So,
you really, that's not
exactly.
Put it on there then.
Exactly. I was like, wait, hold on. Because they get billed separately. You get a bill in the mail and pay it instead of paying it on your property taxes.
It seems way smarter to put it on the property tax bill, because people have to pay their property taxes.
I like it. We don't have to bill it out.
Got a way higher compliance rate, probably. That would be interesting to see.
But to your point, and Berkeley and Alameda, I think, I just looked up, Alameda has 4 times as many people as Albany, and Berkeley's 6 times as many people, maybe. They both probably are much bigger, too, and have more commercial tax to pull that revenue per capita number up. So maybe they aren't the right comparators for something like this.
I mean, it depends on what you want to be comparing to. And that's also the difficulty. I can make us look really good in some ways, and, in other ways we can, pull different data. So I think, like you said, this would be a much more in-depth conversation of what exactly are we. I know this is going to be very factual. So we need to be very careful about who, like you said, we pick as comparators and what we're really looking. Are we looking to see, how we compare to Berkeley, so that if businesses are looking to move in or if people are looking to move, we do compare to Berkeley, and it's just helpful to have it there? Or are we really just looking for, this is a similar city to us, and so
Are there comparisons like this that you ever do, like day to day, that could be useful, in your opinion, for council?
every once in a while, I'm asked to do certain comparisons. I'll go back through and see if I can find in my various files anything that I think would be helpful to have on a regular basis.
Anything else that we're missing, or items on this first page, I guess second page, that you think is more valuable or less valuable?
I think the general fund reserve balance table that's right in the middle is really good. That just gives a quick snapshot of where we've been, what's happening right now, which is the green column, and then the forecast. And that's interesting, right? Because you can see there's a downward trend on the general fund reserve, just looking at this. And this would need to be updated. I did a little update of the general fund reserve based on the revised. So there's a revised budget, and then also, well, I'll talk about it later. But there's the revised budget, and then there's that really interesting set of forecasted revenue and expenses that's at the very end of the biennial budget package, and we can talk about that when we get there. But so depending on which budget numbers you're looking at, it's better or worse. But this, I mean, it's not a surprise, right, that if we're going to budget big deficit budgets, we will chew up the general fund reserve. And this just shows that really nicely.
Anything else that jumped out to anyone? Okay, go to the last page then. So the last page was more about liabilities. We added the bond rating, which the last rating I saw was AA plus from S&P. Also added a piece about the debt burden, long-term obligations as a percentage of overall revenue. This is one of the auditor metrics, essentially what percentage of our revenue is tied up in debt. And ideally, we can debate how low you would want to be, but lower would be better. And then some pension-related metrics at the bottom there around, I can barely see what's on the screen, so I need to pull it up. Unfunded pension liability as a percentage of government-wide revenue, the percentage of the pension funded, assets divided by annual benefit payments, which would mean like how many years of benefit payments you could make with your current assets, and then pension assets divided by projected annual pension funding. And I can't remember the interpretation of that one. Mark, do you remember?
You're talking about the last one, the pension assets over projected?
Yeah, did that take into account contributions to the pension fund? Is that what, okay.
Yeah.
So it's the same thing, but taking into account contributions to the pension fund. And again, we need the appropriate interpretations of how to think about each of these charts to make them more useful.
So that top one, debt burden as a percentage of government-wide revenue, so that does not include pension liabilities, right? That's just sort of bond obligations?
I think that's right.
Okay. And Heather, can you give us a super quick, just what's the bond obligation situation? What are the major items?
So depending on where in the audit you got this from, this may also include the school numbers, because that also affects the city. Basically, what you're looking at when you look at the debt burden is it's basically the debt burden on the taxpayers, not necessarily on the city government. So if you got it from the statistical section at the end of the audit, it includes the school bonding data. The city's bond data, we currently have the 2016 general obligation refunding bond. And then this year, we will pay off the sewer bond, but the sewer bond isn't normally included in it because that is paid through fees completely. Yeah, it's the enterprise fund. Technically, it's not really its own entity, but that's how we basically treat it. So we do have a handful of other long-term obligations. We have the Public Works lease purchase, basically where we will own the building at the end. And then there is the lease purchase of the new fire engine. But the city itself doesn't have a huge debt burden. I do plan on in the fall, in connection with the capital improvement plan, to bring forward. I'll bring it to you guys first. A debt policy. Which basically talks about the pros and cons of bonding versus paying cash versus, short-term borrowing, and would set out and help staff plan. It would basically set out the city's ideals of when would we bond, what would it be for, why would we bond, or do we prefer to pay cash for things and should we save for them, and what is that balance? There are a lot of different schools of thought. So for example, if you're completely redoing a road that's going to last 50 years, do you charge today's taxpayer by paying cash, or do you bond over the next 20 years and spread out the tax burden? So there are a lot of different schools of thought on debt burden, but the city itself has a fairly low debt burden. I have to go back and look at what the school has before I can give a more in-depth explanation.
So probably, just thinking off the top of my head, a consideration of a policy of that nature would have to also look at, well, what is the current debt burden and how does that compare to statewide norms? And if we're already way above, then maybe we don't bond for things. But if we're pretty low, then maybe there's wiggle room for that.
So the state does have a maximum that cities can bond for, a maximum debt level, basically. And I know the city itself doesn't come close, but you have to include the schools, and I have to go back through and look at that.
I'll just add a couple things. So the going down to the pension, the first two pension graphs. So the one on the right is the one that I think, naturally gravitate to, which is how much should we fund it? Oh my gosh, we're underfunded, blah, blah, blah. But some of the papers that the public, forwarded on to us, which were really good, and I appreciate having that information, pointed out that really, a really important thing is, okay, so if it's underfunded, what percent of that is of the total city budget, right? To your point, Heather, early on, when you said that some of the cities that look really good, it's because they practically have no pension, right? So the question is, okay, there's an unfunded liability, but what's the volume of that, or what's the materiality of that in comparison to the whole budget? So that's what that first graph is trying to show, rather than just focusing on, are we 70% funded, 80% funded, whatever. It's like, okay, there's an unfunded amount, but how does that compare to our capacity, our annual capacity? So that's what that's trying to sort of get at. And then the last two are trying to get at the cash flow. And I think one of the issues is it's easy to get super concerned, and I am concerned about, an unfunded pension liability or a portion of the liability that's unfunded. But the question is, how much of that is a cash problem? And so, for example, the first graph shows that if you just take the pension assets and divide by the payments, it could go on for couple decades, right? And even if you include over on the right, if you include not just the benefit payments, but also the annual payments that are made for, people that are currently in the system, then there's still enough assets for, whatever, 15, 20 years or so. And so it's trying to put the whole issue into context of, yes, there's an unfunded liability. Yes, we need to take care of that and really stay on top of that. But it's not a cash flow issue as of now. And also, how is it in comparison to sort of the volume of the state budget itself?
One, the pension assets divided by the annual benefit payments is sort of interesting out of these 4 pension charts, because that one shows Albany deviating from the trend lines of the other cities where they're all sort of, maybe they took a dip in 2020 and then they came back up in 21. And Albany just is going downhill there, whereas the other ones are kind of going up. So that's sort of interesting. It makes you wonder what happened to us in comparison to those other cities. The other ones, we trend more or less exactly along all the other ones. We're very close to. And some of these also, I think it's interesting because you start to get an idea of how we are coming out lower on the state auditor's report. If you look at the top one, the pension unfunded liability divided by the annual government revenue, the state median is down there by like 0.5 or something, and Albany is over 1 on that. So you can see where, and a lot of our neighbor cities are as well. Moraga happens to be under the state median. But you can start to see where we're worse than the median, right, in some of these metrics. And so that's helpful. I think it would be really useful if maybe there could be like footnotes that maybe don't go on the main page, but for those of us that like to read the fine print, you could put a footnote. Here's the source data for this one. Here's the source data for this one. And then if the reader were interested to find out more, then they could, go look up that source. And
Right. I think that's a great comment. And also to comment things like, oh, this is not just the city's long-term debt. It may be, the school district, or it's the residents' long-term
Exactly.
debt, but not necessarily all from the city. I mean,
give more context so you know
For sure.
how those ratios were calculated.
So I think part of our goal for today was just to put something out there, something very preliminary, so we could get reactions to it. Are these the right things in general that should be on something like this? And then Heather, Mark, and I wanted to have a meeting with you to go through in more detail how feasible are each of these things. Are there things that we're missing from your perspective that could be valuable? What do you think about this, et cetera? So any other thoughts around, is there anything glaringly missing, for example?
What about capital reserve targets and things like that? So we do have that capital reserve funding rubric that we have saying these are the goals that we have for these different departments, and where are we on that? Maybe there's some way of just sort of giving a quick overview of which ones are funded fully, which ones are not.
sure. That would just be internal. There would be no benchmarking against other cities. That would just be the internal targets and actual, yeah.
Just thinking about things that seem to be big topics that come up again and again. So there's the general fund, there's the capital reserve funding, there's the budget versus actual, there's pension. What else is there? Like, let's make it longer. And maybe we have to choose, you know, a couple of these and not all of them or something, I don't know. You know, what do you think about the idea of something that could fit on a page? Is that just ridiculous because we can't get enough? Or what do you, I'm just floating this idea of what if we could have a page, you know, here it is, it's one page. We're not gonna make this too hard on you guys to look at. Could we distill it down to the top thing that we felt like was the most important thing?
Well, the other way to do that
Each of
I've
these
seen
categories?
is like a dashboard, right? Like truly like you're sitting in a car and, you know, how's the gas, how's the, you know, how's the pension, how's the budget, how's the capital funding in your red, yellow, green, you know, kind of, how are we doing kind of thing. And then this could kind of give more background to that. If we still continued with something like that, more context of why it's green or why it's yellow or red or whatever, but try to distill it into, you know, a one-page, hopefully highly visual.
I like the
How
dashboard
we doing?
concept, and that could, if you have an executive summary or something, maybe that's a component there.
Yeah.
Because one thing I did feel when I looked at this was I was like, holy cow, there's 3 pages here, and there's lots of, you know, lines and things going every which way. And then when I started to read into it more, I thought, wow, this is great. It's really useful if you understand. And if you can get that far in. So, I don't know, maybe there's some possibility of taking these underlying charts and feeding them into a, you know, fire risk is low today or high kind of a thing, something like that.
Right. And that is what the state auditor report does, right? I mean, they have all these indicators and your green, yellow, or red on each one, and then they distill it down, they weight them together, and, you know, your city has an overall rating.
Right. So
So-
maybe we kind of are looking at emulating that and just sort of reproducing key components of what we think is important about our health.
I think that's a good goal.
And is there, I mean, of these charts, I mean, is it something that we could just pull, like if, you know, if we had the tables set up in Excel and you provided us with the quarterly report and we could just drop numbers in there? Or would you rather produce that because it's got to be right?
I have every faith that you would do it correctly. However,
Wrapping to my dummy number.
I think, like we were talking about earlier, there is context that, you know, you don't necessarily know unless you look at these numbers day in and day out. Earlier, I think you had said, you know, how easy or someone had asked, like, how easy it is to put this together or something. And, you know, a lot of this is stuff that I look at on a regular basis. It just doesn't necessarily come publicly. I promise I'm monitoring things. But, yeah. I think it would need context. That I think would be better that if staff provided it. But, I mean, I can give anything that anyone wants, so, within reason.
Because I think the original idea behind doing this was to just give a really high level, very easy to see and understand what's the status of the city and what are these key things. And you guys have really touched on a lot of them, right? The budget versus actual and the pension, the general fund balance, and if there's a way to maybe distill it down so it's even a little bit more really high level, without losing all this, we could have this for ourselves. Maybe.
Everyone's looking at me. So I mean, I think you go back to, you know, the conversation that we have about what lines am I showing in the quarterly report. There's definitely a balance between what will people actually pay attention to and what's important. You know, these things are clearly important, but how much do we provide? I mean, this is just 3 pages. I constantly give you like tens of pages of things. But that is a very good question that
That's kind of, that was the impetus for doing this, right? Was that, this report is, 50 pages long, and there aren't very many people, I think, that get all the way to the back. So if there's a way to just give a super high-level summary, what?
Yeah, I really like the stoplights or like health of the city type indicators. And then I'm wondering if maybe it's not 3 pages, maybe we shorten this to like 1.5 pages and really pull out what is the most important thing about the pension to go in here, what is the most important thing about the general fund, so that it does fit on a page or 1.5 pages, or maybe there's one annual, one that's quarterly. And I would think that is 2 pages is easy to get through. If you're going to read something, read this.
Right. A lot of footnotes for Kim.
Yeah, I want coherence. Okay, so what do you think is the right step at this point? Do you want to go back and try to make it even a little bit more high level? And
Yeah, I mean, I think our next step would be to meet with you, Heather, and Cassie on the details here and take some of the feedback that we've discussed and think about what could we do with that. But I think this was a really productive conversation. Mm-hmm. And do we need to take public comment
I
too?
think we need to take public comment if there is any. Online? Okay. Okay, so we'll leave it at that. And then we'll move on to the next item on the agenda, 5-2, which is the general ledger detail review. So I sat down with Heather and discussed the details of what flows into the, I'm going to hold up a tiny thing. This is the budget, right, that lists out revenues, expenditures, and where do all these numbers come from? And there had been a question from Francesco Papalia at the last meeting. What feeds into property taxes, for example? That's a really large line item. And can we see what is behind that? So I was hoping, Heather, that you could put on your screen the 2023-0421 workbook. I think that's the one that you had sent me. So that I could just do a really quick overview of how these things feed together. Okay, so the presentation that we receive, which is the sort of overview of budget, is on this tab called Presentation. And you'll recognize this because it's divided out into like revenue and expenses. And the line that I had gotten down to was, there's I guess it's row 126 is where the revenues start on this workbook. So here are the revenues. Property tax is the largest of these. And so the question that had been posed last time was, well, what's in these property tax numbers? How do we know, what these are? So the cell that is highlighted right now is cell F127 for property tax. And it shows 4,342,546. And then if you look in the cell up in that sort of top middle area, it shows that this is referencing pivot data. So there's a pivot table that draws an extract directly out of the city's general ledger. And all of that data gets dumped into this tab that is called GF, which is a couple over. So can you show that GF tab? So the GF tab has a series of accounts. So this is just organized by department and by accounts. and you've got to go down to row 2,168. There it is, property tax. So there is a range of accounts. There are 9 of them. Property tax, current secured, current unsecured, current supplemental, PR secured and unsecured, HO exempt, in lieu, which is a vehicle license fee. Then there are a couple more. So if you, all of those are separate GL accounts that are picking up slightly different types of property taxes, and those are the items that feed into that property tax number. So I just wanted to show that these were the building blocks of what goes in there, and then similarly, sales and use tax is right below that. That's another really large line item, and there are 3 different ones that feed in there. I think it's 01, 03, and 05. So there's the local in lieu district and the sugar sweetened beverage tax. So that's basically how these numbers are being put together. And I'm not sure, you know, to me that I'm satisfied that I see where these numbers are drawing from. The actual, current year actual, last year actual, budget numbers, they're all supported, you know, on these tabs. And this spreadsheet is just pulling this data out of the general ledger, and there are multiple different sub-accounts that will feed property tax or sales tax or franchise tax, et cetera. So I don't know if there's any specific questions about this.
No?
Okay, are there any public comments about this?
Thank you, Greg Bone, retiree. It's amazing. What I'm missing here, I wish Francesco were here tonight to see your explanation of this. I would love to watch his face. And also, I really appreciate the presentation from our resident quants on the metrics. It's very good stuff, so thank you.
Thank you. Okay, that's all I wanted to say about this particular item, so
Very impressed.
I didn't do very much. All right, so that was the brief discussion on the general ledger review and how the numbers are feeding into the worksheet that we see, the schedule we see. So I'm assuming there's no public comment from the virtual world? Okay. Then let's move along to section 6. First item there is 6-1, the fiscal year 23-24 and 24-25 biennial budget. So that is, it's one of the attachments that we have, and I thought it would be useful to just check back in on this topic because there were a couple of revisions to the budget that reduced the planned deficits for the next 2 fiscal years. And I don't know if this committee had a chance to review those items and see what that was, but the budget numbers are, the deficits are not as big as the budget that we originally reviewed. And if you look at page 105 of the agenda attachment 6-1, can you bring that up?
What, 105 of 242, is that the one?
So the agenda attachment is 6-1, and the PDF pagination, it's page 105, and that's where the budget starts. Okay, so there it is. And so where this landed, and I believe this is the budget that was approved by council. Is this the exact one that was approved?
Yes, and there was one amendment. They added $6,800 to the recreation budget to add a nighttime music in the park event this year.
Okay. So the fiscal '24 deficit will be 1.3 million. And the fiscal '25 deficit will be 2.1 million. So slightly less than what it was when we had seen that. Heather and I spoke about this budget, the revisions to the budget, and there were a few things, just to give you some of the highlights from our conversation. The pension transfer, the pension tax transfer was increased based on an updated assessor valuation, so the revenue increased from that, and then transfers from other special revenue funds also increased. So those were some changes to revenue from the time that we saw the budget. And then some expenses decreased. So there was a community engagement specialist in fire, which went from full-time to a half-time position. The fire budget in general is going down because Measure K was passed. And so there's a decrease in the fire budget, the EMS budget, I guess, in general, of about $500,000. There were some other expenses that were up by about $150,000. So there's about a $350,000 decrease in the EMS budget. Is that right? Am I saying that right? Community development, there was a question there. The professional services budget was increased by $1 million to pay for the active transportation plan, which is required by the state of California to be updated every 5 years. So this is one of those items that maybe eventually we'll be able to do a set aside into a reserve fund so that we can even out that expense to $200,000 each year over 5 years instead of $1 million every 5 years. And we increased our self-insurance deductible to $100,000 from $50,000, so the insurance will not go up by as much as we had thought. So that's a super high-level overview of the changes that resulted in the deficits not being as large as we had expected. There was another section that I just wanted to call your attention to, which I thought was really helpful.
If I could interrupt, what was the deficit before? So it's 1.5 now, and
I think it was going to be,
think it was
2.5
yeah.
million in '24.
okay, so that's significant.
And it went to 1.3. So the deficit went down by 1.2 in the approved budget. And then the '25 deficit was going to be 3.7 million, and it went down to about 2.2. So some fairly significant reductions there, although they're still deficit budgets. But some pages that I thought were really interesting in this budget packet are at the very end, pages 254 through 256. These pages are actually showing, so they show actuals for the years that have been completed, and they're listed across the top columns there. And then there are forecasts for what we think will actually happen based on positions being open. As you know, we have to budget for full employment from day one so that you don't have to go back and get money appropriated. But in practical terms, we know we won't have that. And so I know that's one of your assumptions about expenses, right? Salary expenses will be less than budgeted. What are some of your other assumptions? Because these pages are really interesting. They don't show that we will probably really have a deficit until fiscal '25-26.
So I basically took historical spending and what portion, and then said, okay, over the last, I know in this you can only see 21 and 22, but I looked back to like 19 and 18 and past and said, okay, historically, what has been our average, actual change year over year? And then I applied that to that average change year over year to moving forward. There are some other things, expenses. I also assumed, like, utilities didn't go up, very high. Contract services, I'm trying to think. I added an increase in actually funding reserves, I think, later on. Yeah, capital improvements. And that's part of what's adding to this projection, but we all agree, I think we need to actually fund capital, our reserves. And I think that's really it. I just used historical averages, and then for some of the revenue I used, like for sales taxes, we have a sales tax consultant that meets with the city quarterly, and they provide fairly extensive, this is where we think things are going based on the economy and all of that. So I think I used those numbers that they provided. But most of it was just, here's where we've been, here's where we're going, plus any changes that I knew were coming. I accounted for the UAL adjustment year over year. Mm-hmm. I knew exactly what that was, so I accounted for that in this.
Mm-hmm. So on the property taxes, so it looks like it's just sort of going up on some straight line basis. So is that accurate? Are you just increasing that on a kind of a strict 3% kind of a rate, or what did you use for that?
Yeah, I'd have to go back and look and see what number I picked exactly. I didn't go year over year because COVID was interesting. A lot of people did improvements, and there were a lot of turnover in houses. So that was kind of an outlier of if a house is sold, the new property tax value is what it was is reassessed. So it could drastically increase what the assessed value is. So I didn't include that. I went back a little bit further and said, okay, when we had a fairly normal increase year over year, what was that? And I think I'd have to double check, but I think I left it at 3% per year. Yeah.
So even with this, if you guys look at page, by the time you get onto page 241 of this document, you get to fiscal year 25-26, then you really are thinking, well, now it's deficits.
And again, if you notice, I did start actually planning for moving to our reserves. If you remove that, it's not a deficit. However, at the same time, that is something that we need to do.
So the reserves, is that the capital improvements line?
Yes.
Okay, so that's $750,000. And is the UAL payment called out separately anywhere in here, or is it just wrapped into benefits?
It's wrapped into the fringe benefits.
Okay, because we also know, and there's not much we can do about this, but we know that UAL payment will rise to about 5 million or 4.5 or something like that towards these later years. So actually, when we were in the council budget study session, one of the council members made that remark, that if we didn't have such a big UAL payment to make, we wouldn't have a deficit. We wouldn't have a problem, but just the situation is we do, right? And this projects out to 2031, 32, and trying to project 10 years in the future is really, who knows, what these numbers are really going to be like, but we do these projections so that we have something to talk about, and all the trend lines show that we will be realizing really large deficits by this point in time, because we do have that UAL that's looming and is going to throw us into this deficit position. So to me, it makes it just very clear that either we need more revenue or we need to decrease expenses, or both. So I thought this was just interesting because we had all talked about, what do we really think is going to happen in terms of expenses? So this is great. I like these schedules, very useful. Did anybody on the committee have any comments or
Sorry, which line
questions?
item is the pension?
I think it's in payroll and fringe benefits, which is line 41 in the expense section. That's where it is, right? Yes. And if you look at fiscal year 2031-32, line 41, payroll fringe benefit, it's 12.3 million. And we know that the UAL payment will be close to 5 million.
Okay.
So it's a huge percentage of that payroll and benefits number.
And then how did the general fund show up in the capital improvements line? You said it was in that line?
There's a 750 that shows up,
Oh,
or now it's $1 million in
No,
this exhibit.
It's $1 million. So she is planning for adding to funding for the capital reserve account by setting aside $1 million a year in 28, 29, 30, 31. And I think it's $750,000 a year in the sort of next 4 years before that.
And then we have to put $1 million in it.
Yeah, so with the idea being to get those accounts funded.
Got it. Okay.
Yeah, with the updated reserve fund policy, it made it a little bit more clear. I think it's not just stuff, but it's those plans that are, required by the state that we need to, save for and do every so many years. We have a lot of IT infrastructure that needs to be updated based on the strategic plan that we had done. I just pulled up the Excel spreadsheet, which I would share, except it's very large and it would be really tiny. And I confirmed that I projected out the property tax revenues at an increase of 2.5% a year after this most recent budget. There was a 5% for the most recent budget, and then after that it went back down to 2.5%.
And when you looked at the actual experience of what had happened before the pandemic, was it about 2.5% a year increase? Okay.
And at a high level, what were the biggest differences between what we budgeted for 24 and 25 compared to the projection?
Salaries and benefits are just the biggest cost, so that is going to be one of the biggest drivers. I think professional services also, because we often plan for using contractors and, either the contract comes in under budget or something like that. I think non-capital assets. So a lot of this, it's a little difficult to say because it's not laid out exactly like the budget is. There's often there's an appropriate amount of savings in the public works budget because you budget for, things breaking that. And, I really liked where you went, the other meeting with, if there is that big thing that breaks, why isn't that in a reserve? Well, because the reserves aren't necessarily funded right now. But there is generally probably 20% savings in the public works budget because we, budget for things that, might not necessarily happen, but if they happened, we need that there.
Right. So we know that in probably 3 out of 4 years, it's not going to happen to that level, but they have to plan for a worst-case scenario each year.
And the same thing with, there's certain lines in police, their forensic line. Normally we don't want to use all of that line, but in some cases, if there is a, more intense crime, they have to, use their forensic line. So it's kind of a middle ground of what we normally spend that we try to hit.
You had mentioned earlier something about during fire season, when the fire department does mutual support, I think you called it. So when they've got to go up to the mountains to help out with fighting a fire, does the city of Albany pay all of that salary and overtime?
So
them?
we pay it up front. We do get reimbursed for it.
Oh, okay. Any other questions on the budget?
No, this was super helpful. I did not catch those last few exhibits, and these are super helpful. So I appreciate you pointing them out, and I'll definitely take a close look at those. I guess the only question is kind of a smallish thing, but like in that first exhibit we looked at, I think it was page 105, the community development. I think you had mentioned that there's $1 million one time or once every 5-year payment.
And that's why that one jumped up so much.
Yeah, but it didn't jump back down the following year, so I'm wondering if there's maybe a little bit of cushion in the 25 budget, because unless maybe it's an expense that goes over 2 fiscal years or something like that. That's just kind of the only observation I had about that.
Let's look at that, 105.
I'm going to make you all dizzy for a second. I'm sorry.
It's 105 out of 256.
Yeah, I'm looking for their reserve fund line because that gives an idea of what major plans they have coming up over the next few years. These are the special revenue funds, and then reserves are item 7. This is debt. Almost there. No, I think it was here. They might be the first. No, they're 8. Okay. Yeah, they have, in 25, they need to start updating the general plan for the city, which is estimated to cost approximately $600,000. So.
I'm sorry, what's this? This is 2,000.
So this is what the community development reserve, this is what community development anticipates needing to spend in the next 5 years for larger projects. And it's in 25-ish, the city general plan is up, and that costs about $600,000.
Oh.
So between the active transportation and the city general plan, it will be fairly significant over the next few years.
Okay, so there's 2. Okay.
Yeah, I think they took the active transportation off of this because it was in the operating budget.
Thanks.
Any other comments? Is there any public comment on the budget?
Thank you again. I'm Greg Bone, retiree. I really appreciate that 10-year cash flow projection you put in there. I thought it was fascinating. Seems perhaps more realistic. I don't know. It does ramp up, though, as Chair Traynor has indicated, quite a bit after 26. So I also note that. What I've kind of advocated for, by way of correspondence to you, is particularly on the 10-year cash flow, you're making assumptions which I think are rightful, that we're not reaching full capacity on staffing, but yet we're trying to achieve full staffing. And it looks like we're projecting deficits no matter what. It seems to me it might be wise to put some sort of a governor or a brake on this request for full staffing. Set it at some acceptable, perhaps historical level, and just try to maintain that. Any restriction, though, I would say this absolutely, certainly should have an override capacity by the city manager, no doubt. She knows what will work here and what will not. So I don't, but I would trust that. I really appreciate the inclusion of the 2 FAC reports in your budget packet. I think that shows respect you're due for the work you're doing here. And then finally, I just had a thought as I kind of listened to all this and try and digest it at home, look at numbers and trends, and your reports are very helpful. I don't know, the 2 revenue enhancement committee members are not here tonight, but I don't know if this is happening or not, but it seems like it might be very wise for them to liaise with whoever or whomever in the city is really looking at this potential new revenue sources. I don't know who they are, but I really strongly suspect you're doing something, and I think you may have consultants involved from what I picked up on a comment at the last city council meeting, and find out specifically what new revenue sources are being explored, how much revenue will they produce, and when will they become active and online, because that's something we absolutely have to know, as much as we can know, because if we don't know, I don't know at what point, and got some very smart people in the room with numbers, finance director, staff here, committee, at what point does this thing get to a point where it can't reverse itself? I don't know, and I don't know if anyone knows here, but whatever it is, we can't let it get to that point. And that's why I really appreciate the metrics idea, constant information updates, find out what the city's working on. Will it really produce something here, or will it not? Because if it will not, you've got to change your message. And I appreciate your message, but maybe change the language, the text, from a serious problem to a really serious problem. Thank you. Thank you.
Thank you. Any other public comments? Okay. Okay. So that is 6-1. 6-2 on the agenda is the fiscal year 22 annual comprehensive financial report. So this is the audit report that we had received a draft of back in April. And so this has been approved by the council. And I thought it would be useful for us to just spend a little bit of time with that report, since we never actually got to see the final. So I don't know if can you pull that one up there?
Where would you like to go?
Well, I don't know if the other members of the committee have had a chance to really interact with this audit report, and if you have specific questions or comments that you're interested in exploring here.
So I did look at it. I guess one question I have, is there any changes from what we were presented before with, no? Okay.
I mean, I'm just looking at the report opinion, and from what I'm reading, it seems fairly standard. Things look satisfactory and presented fairly, so that's the biggest thing I paid attention to.
It's a clean opinion, clean unmodified opinion, which is what you want. And that's not always what the city has had. There was a disclaimer of opinion about 5 years ago, was it roughly? So there's been tremendous progress towards being able to get this done, and with an appropriate opinion. I guess I didn't really want to go over in detail all of the particulars of this report, because the auditor did take us through this, but there were just a couple things that I wanted to either mention or just spend a couple minutes talking about, and then I wanted to talk about their sort of management recommendations because that's kind of the meatiest thing for, I think, for us as a committee to be trying to help evaluate, like, how are you guys doing with the finance department, and what were the recommendations that came out of this audit? And let's talk about those and see what the path forward is from those. So just two small things that I wanted to touch on. On page 125, so there's a section of this report after the audited financials and footnotes where they give other statistical, like, supplemental data, which is really fascinating. So I believe it's page 127, and that one is a chart of a bunch of, and I might be looking at a different number than your, weird, when I was looking at this earlier, I was able to see page numbers, and I can't see it on my smaller screen. Okay, let's see, here we go, let me try this again. 27. Okay, so it's table 4, City of Albany, changes in fund balances of governmental funds last 10 fiscal years. This is a fascinating document, the schedule. This shows, revenues and expenditures over all the fiscal years, and it looks like they did not update the last column to 2022. It reads 2021. So, I mean, it's probably too late to get them to change it, but just want to point that out, that it should say 22. So that's the results of the last year, right? Is that column that's on the far right?
Yes.
And if we go back 2 pages to page 125, this is another really interesting schedule. It's table 2, changes in net position last 10 fiscal years. And I think I've had this question before, but maybe just didn't have a chance to really ask it. In 27 and 2018, I think this predates you, Heather, there were large deficits in those years. The general government expenses were way up beyond what they were. So if you look at expenses, governmental activities, general government, you've got over 14 million in 17, over 14 million in 18. And prior to that, they were running like 3 and 4 million, and then they dropped down to about 8 million after that. And those years had some pretty big deficits also. And I think this was also the disclaimer of opinion years. So do you have any insight into what was going on there?
So 2017 and 2018 were the disclaimer of opinion years. It was also when we had switched software systems. And there were several adjustments made. And I would have to go back through and figure out exactly what happened. I know that when I was going through it, because I was hired in August of 2018, which was right in the beginning of 2019's fiscal year. Then we were going through the audits for 2017 and 2018. I had to go back through and reconcile a number of things, and I know we did not find any fraud, so we don't need to worry about that. But there were a number of adjustments that had to be made. So in payroll, I know that payroll, there were some issues. In 2017, they were doing the first half of the year's payroll in the prior system, because since we're on a fiscal year, but taxes are on a calendar year, they didn't want to break up for W-2 reporting. And so there was some issue with recording the payroll in the new system and then also recording it in the old system and kind of reconciling those few things. So I would have to go back through and looking at it. It might also be that some items were moved around. For example, community development, it looks like in 2014 and 2015 had higher in 2016, had higher numbers, but then it went back down. Trying to think, I know that,
Is it possible that maybe expenses were understated in 16? Because when you look at the general government, it was 4.7, and then in 19, when it sort of normalizes again, it's 7.7. So that's $3 million difference. I mean, but I would imagine if they needed to make prior period adjustments on those audits, they would have gone back into retained earnings and opened a prior year, right? So
yeah, they weren't recorded as expenses, and I think, it's not here, but there was a line for prior period adjustments on a different screen, so it might have been wrapped up. I know I think it was 2019 when the UAL started to increase, and PERS costs started to increase, like active PERS costs also started to increase. So that might explain part of that increase, but I would have to go back through, I've kind of blocked that out. But I would have to go back through 2017 and 2018 and.
yeah, I don't mean to have you like go back and research 5 years in the past. I was just looking at that, and you can kind of see, wow, these years really stand out. There was a $7 million deficit in 17 and almost a $6 million deficit in 18, which if we were realizing deficits like that now, there'd be a lot of wringing of hands, and I imagine there was at that time too.
One thing that I know, it might be the extraordinary item for 2016, we closed, so the city previously had management salaries under a JPA, and there was an issue that was found with that recording, and that had all been under a different PERS plan, and that was closed and added to the city's plan. So all of a sudden it looked, and you'll see that when you go through the PERS actuarials, there's like a massive increase in the like UAL at one point, and it's because the two plans merged, and it did something to the financial statements as well. So that might be what that is.
Okay. I was just curious about that. The section that I wanted to spend a little bit of time with is the auditor's report to the auditor's report over internal control, and that starts on page 144. And so on page 144, this report is not the audit opinion, but it's where the auditors talk about the control systems of the city and their testing of those things and findings that they had with respect to controls in the city. And my general read on this was, I always ask, do you feel like you have enough staffing to get the job done? And the general comments that they keep coming back around to are, you really should have your accounting policies and procedures, written down, and make sure you have enough staff to carry out all these procedures at year end, because that's what a lot of their findings have to do with, is just not having adequate staffing to be able to get to everything. So just as a preface to this, on page 144, they talk about the different types of control issues that you might have in an organization. So there are kind of 3 levels. There's a deficiency in internal control, a material weakness, and a significant deficiency. And so the order of severity is a deficiency in internal control is the worst thing. And they talk about it there. It says that a deficiency in internal control exists when the design or operation of a control does not allow management or employees in the normal course of performing their assigned functions to prevent or detect and correct misstatements on a timely basis. So if you have a deficiency in internal control, it means you're just not going to catch problems. And that's not what they said is happening here. The next thing is a material weakness. So that's a deficiency or a combination of deficiencies in internal control such that there's a reasonable possibility that a material misstatement of the city's financial statements will not be prevented or detected and corrected on a timely basis. They also didn't say you had a material weakness, but then they described significant deficiency, and they say significant deficiency is a deficiency or combination of deficiencies in internal control that's less severe than a material weakness, yet important enough to merit attention by those charged with governance. So that's what they're reporting on in this report. And if we go to the next, I think we have to go down a couple pages.
It's so interesting that a significant deficiency is not as severe as a deficiency. That
Isn't
seems
it
completely
the-
counterintuitive to me, like just my understanding of the English language.
The wording is absolutely terrible, and I think you should write to the AICPA and get them to change this.
Yeah, it's a deficiency. Is it significant? No. Dang it, it's significant. Oh, phew, it's just significant.
Yeah, I know. It's really weird. You have to kind of go through and go, okay, which one of these is the worst one? So this is the least serious of the three. And so on page 147, they talk about their finding. And they basically, I think, they have 6 different things, and they sort of lumped them all into this same thing. It says context, not following written routine and standardized closing processes increases the risk of material misstatement in the financial statements. In addition, turnover can create a situation where there are not enough qualified personnel to perform the routine controls required to properly maintain the city's financial records. So they're saying that they identified these 6 different deficiencies where the general ledger balances didn't tie to the support and had to be adjusted. So what's the plan to stop having this? Because I looked back through the last several years, and they have comments like this that are fairly similar every year.
Yes, we did in February of 2022 hire 2022. He's been here that long. Hire an accountant, which was we did increase staff. We did hire that position, which is great. But we have had some turnover in other staff, so he's kind of needed to help out in other areas. A lot of this stuff has been low priority, but I've actually been working on it all this week. So, for example, the long-term liabilities, we record them in their individual funds appropriately. There's just a lump fund at the end that kind of puts them all in one place that we don't touch. And so at the end of the year, the auditor goes through all of the individual funds and then just puts them all in one place. And I'm like, yep, fine, whatever. I'm going to do it this year. So it's little tweaks. I have finally had the time to sit down and go through some just outstanding balances from the software conversion that have just been rolling over, and they're small. Like, there was one that I was dealing with today that was like $2,500, and when we're looking at $30 million, $2,500 has not been my biggest thing. What's going to happen with that is I'm going to close that account and record a miscellaneous revenue for this year, and done forever. So I've finally been able to sit down and start to do those. We have started a checklist for year-end close items, and we're working towards a monthly close. As soon as we are now fully staffed, so as soon as we're able to kind of get into a groove, we will, make sure we do that monthly close, and that should help with all of this kind of stuff. The capital assets, They were recorded properly. We presented the fixed asset schedule to the auditor properly. It's just we have decentralized purchasing, and some people code an asset, which is anything over a piece of thing over over $5,000 to like an equipment account instead of a capital asset account because they don't know. But we make sure we comb through all of those at the end of the year and make sure our asset listing is correct. So we're working on fixing some of those, smaller things. And if you notice, this financial reporting and closing has been there for a little while, but it's morphed. It's morphed from this is a mess to here's very specific things that need to be addressed. And so we are addressing those this year and making sure that this finding will finally go away. We did go, when I got here, from 9 findings in 2019 down to this one, so I will take that win. But this one has just been a little bit more difficult for us to get to. But again, we are now fully staffed, and I do not anticipate that this finding will continue in the next audit. The auditors are actually here this week, and they even told me today they might leave a day early, so pat ourselves on the back.
Are they doing like control walkthroughs?
Yes.
Year end?
Yes. It's the preliminary interim audit work.
Right.
They like to visit us twice a year. And so this is testing, to make sure that we have the correct controls in place for cash handoffs, to make sure that we have all of our documentation in place for larger purchases. Did we bid correctly? Did we, put the right notice? Did council approve when needed? Do we have the correct insurance certificates? All of that kind of stuff, making sure that we have checks and balances and the correct approvals. And so that's what they're doing this week. And then they'll come back the end of September to basically look at all of our final items and make sure that my long-term debt and liabilities are reported in that fund correctly.
So you know what their hit list is going to be.
Yeah, and I emailed the auditor even a couple weeks ago and was like, hey, I'm going to start working on this. What do you want me to do? So I have a list from them as well in addition to this. So
does this also include then, when you say working on monthly checklists and things, that these types of items will be memorialized into the procedures, the way they want you to do this so that you can escape from this finding?
I said it before, and I will say it to my last breath. Cassie has done an amazing job in putting together detailed procedures for everyone with screenshots and all of that. And so we are in a much better place than we were, in 2019, but also from, even just everything that we do, that we now say, oh, do we have a procedure for that? And we say no. Well, we'll create one. So we've been doing much better with that.
That's great, and that's from a perspective of if you haven't worked in accounting, the sort of mantra is everything has to be written down in a procedures manual. It should be approved by the appropriate, board or council or whatever, and then you have to make sure that you're following those things. And having those detailed lists of how to do something with screenshots is so important because we're still in a really low unemployment situation for accounting and finance people at a minimum. And so if you do have turnover and you have to bring somebody in, it's really critical to have like those step-by-step screenshot, here's where you go, and by the way, here's this list of things you have to do, because otherwise you're at risk of just no one knows what to do. And you know what I'm talking about. All right, did you guys have any other questions or comments related to the audited financials?
No, that was super helpful and educational to me, so thank you. And I guess the only question I have in terms of timing for next year, were they able to make any commitments about maybe having the audit done earlier or like?
They asked if they could have leeway, and so I told them that I moved their deadline to December 15th.
Okay.
So they're supposed to give you a first draft by December 15th?
It was sort of a joke. We we are still aiming for everything being done by December 31st. We haven't actually sat down and put the schedule together. I did ask that this year they come out a little bit. Last year, so to give context, yes, the fiscal year ends June 30th. We still allow for prior year items that come in for an accrual basis through August 15th. So our year doesn't really end until, sometime after that, when we're able to say, okay, we've done our final check run, we're doing our final review. And the auditors came like maybe the first full week in September. So we just didn't have everything together. So I did ask this year that they come later in September, so it gives staff a little bit more time to actually make sure that everything is wrapped up and ready to hand to them. And so that should help. If we have everything, they often say, if we don't have everything while they're here, they're then moving on to different audits. And so they get to it as as they can after we've provided it. So I'm hoping that if they come a little bit later in the year, we have everything, tied in a bow and handed to them, and they can be done so that they can wrap their work up and give us the final report on time this year.
Great, that sounds good. Well, thank you. I know it's a huge undertaking to get through that, and thanks for your efforts to make it happen. Do we have public comment on the audit? No. All right. So the next item is item number 7, future agenda items. You all have any requested future agenda items?
This is nothing new, but I'm super interested to talk to the investment folks. I'm just looking at the budget, about $500,000 of investment income on $30 million. I'm hoping they can beat that in this investment environment, and so I'm super interested to talk to them and hopefully getting some good news. That could be built into the budget or something.
Yeah, the investment policy was approved by council on Monday, and so I reached out to them and said, all right, we're ready to go. Let's get on this. And I am meeting with her on Friday.
Okay, great.
So our next meeting is it September 6th?
That's what it says on the agenda. I was wondering about that, though, because when we ever so briefly discussed the calendar, there was a July meeting possible on there. And I know we never really got through the full proposed calendar because we keep not having time to get to it. That probably should be something that's on the future agenda. So we know for sure. I had a fiscal 22-23 proposed calendar from a long time ago, from November, and that calendar had said July date to be determined we were going to do the Q4 update, but we actually need to do the Q3 update. We couldn't do a Q4 update in July, that'd be too fast.
Please don't make me do that.
But, so I'm not sure where we are with that whole calendar stuff, but I thought we were going to meet in July.
The one that we proposed that we pushed off from last doesn't have a July,
Okay.
no. But we meet every month, September, October, November, and December.
Okay, so there's more,
You get to spend your holidays with me.
Taking the summer off.
March, April, May, June, September, October, November, December. Is what I noted at some point.
Okay, great. Because we have a lot of stuff to get through on the next meeting. So,
Yeah, I think the April one this year was a special meeting because normally it should be February and March, but we didn't have a quorum in February, so we made a special meeting in April.
Right, because we had to reappoint members.
Yes, so normally it would be February, March, May, June, September, October, November, December.
Okay, so with all that said, I think September is probably a good time to just revisit the dashboard that we just talked about, because we'll have had
Absolutely.
time to meet, and we'll have a full committee, hopefully.
Definitely. So dashboard discussion, investment committee update, is that the right way to say that, or investment policy update, or just an update on the investments?
Yeah, but it may be early. I don't know if they're just starting now or they're going to just start next month. I don't know.
I think so when does the quarter end? July, August. So they would have, if we start investing now, June would be a quarter end, and then they'd probably August, so September. They could probably present, I think if you want like 4 months worth of data, they could probably present in November, and you'd have probably more meat to actually talk about.
That's
Okay,
fine.
so I'll say investment results update in November. And then we'll get 4 months worth of data. The other things that I had on my list, some of these are just carry forwards. So we had thought we would do the Q3 finance/budget update this meeting, but we postponed that. So we'll have that in September.
I'll bring all of 23 in September.
Okay, so it'll be Q3 and Q4. Okay. And then we also wanted to talk about just the banking discussion, maintaining we had the whole banking meltdown, right, with Silicon Valley Bank and First Republic Bank, and balances that are over the FDIC limits. And I think there are certain special things that apply to us as a city, but I don't really understand those. So I was kind of looking for just some discussion of our credit concentration risk with respect to our banking balances. Dashboard discussion, investment results update. Francesco had wanted to talk about how property taxes are paid. So we could ask him if he would be ready to do that at the next meeting. Also, we need to have a revenue subcommittee update. I think that was going to be last meeting, but that meeting ran until 10:45 and we just ran out of time. So I think we should give them an opportunity to present what their current results are.
Should we push the property tax thing to like October then? Because it sounds like that September meeting's getting pretty
It is getting
stacked.
really full. So maybe we say property tax discussion, how our property tax is paid. Maybe that's an October meeting. And then I do think we should discuss the draft calendar for the committee and just get that formalized. And maybe that should just be, we could just go ahead and update it to the next, since we'll be most of the way through this year by September. We could have that include what's happening in the next, whatever, looking forward 12 months or something. So that's all I had. All right, so we don't have to do public comment on that, do we? The next meeting is scheduled for Wednesday, September 6th, 7 p.m. And time is currently 9:13 p.m. and this meeting is adjourned.